This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil, going to give you a stock market update for Friday morning. We have some movement to the downside for the first time in quite a while. Let's take a hard look and see how important this really is when we go down to the market conditions. If you're interested in learning more about some of the techniques I'm going to use using MACD and ADX, along with price structure, moving averages, that's such a thing, in multiple time frames, I would suggest starting with the book. I'm offering at a discount right now. Also, if you like the content, hit that like button and also subscribe. Okay, like to start with the sentiment and then work my way up. All right, and the sentiment jumped again. We have a move from 45% to 47%. That's 47% more bulls than bears. And just for anyone new to watching this channel, I use the Investors Intelligence Sentiment Number. I've been using it for over 30 years. I've got a comfort level with it that shows me whenever we're in that range, somewhere around 35 to 45%, there's a higher risk to looking for a pullback or something like that. So we're actually at 47%. The bulls are at 64. It's a pretty big number. So we've definitely got that squarely in the negative camp right now. All right. Now, overbought, oversold, typically what I'm looking at is moves above 70. We were up above the 80 level for quite some time, and now we're turning down. So this was basically the first week down below that level. So even though it's at 68, I'm going to keep it at the negative camp because I really think that this is going to need to work its way back down under 50 at a minimum to work off that sort of negative condition. All right. Now, I'm going to go through the volatility both weekly and daily in a minute as we go through, but just to give you an update on everything. So we've got neutral for both the weekly and the daily. I'm going to explain why that's the case. One's going in one direction, one's going the other, but they're both neutral. And then I got trend and momentum are positive for both the monthly and the weekly. The daily trend is positive, but I'm going to show you why I moved the daily momentum to neutral this time. All right, let's go ahead and get going through these. So what I meant when I said that the average true range is going in different directions, you can see that the ATR on the weekly is actually below its moving average right now. All right, we've got an 18, so you can see what I've done here. I've got a 20 ATR, and then I've got an 18 MA of the 20 ATR. And what we want to do is look for periods where the moving average is moving up or the moving average is moving down. That's telling us something. So when it's moving down, that's a bullish scenario. When it's moving up, it's negative. It means volatility is increasing because we're measuring the volatility by the size of the bars. So the bigger the bars get, the greater the volatility. There is some correlation to the VIX, but it's a little bit different. I use this more like a trending indicator. I found that very hard to do with the VIX. I don't see it's hard to anticipate anything meaningful for me because they happen in such quick spikes. But you can see that the daily is moving up, and I do believe the VIX is making a move to the upside as well, but I'm waiting for this moving average to actually turn to the upside. Now, you can see that it's just starting to tilt up, but I think it needs a little bit more slope before it's actually going to have some meaning to me. Now, one of the things I wanted to point out is that while this RSI on the daily is trying to move down to oversold, we are already down into the zone below 50 on the daily, and the RSI 20 is above 50. All right. Now, most of the time I would be looking for this as a potential buy signal, but I don't like the price action. Really big gap here and then a big down day. Not exactly attractive. The other thing that I would say is that we got over 70 and then look at what happened. We got a little divergence here. Now, it doesn't qualify as a true divergence simply because we don't have a actual pivot. All right. We don't make a pivot high, pivot low, and then a new high, but you can see that it tried to push higher and this just couldn't keep up. So that was actually a pretty good signal there if you were watching, especially when this is above 70 and in other words, both the daily and the weekly are above the 70 level. But we're down into the zone, so it'll be kind of important to see if we get any kind of a reaction or if this RSI 20 actually closes back clearly below the 50 level. If that's the case, then we know we're into more of a corrective phase in this time frame. Now, just getting back to the one more thing before I get into the time frames is look at what's happening on this. Let me just actually zoom in on this. Do you see how just one big bar is causing this to move to the upside? So if we get volatility, so let's say the volatility keeps increasing, we get big bars as this corrects, this is going to be moving to the upside. So we want to avoid, when we're in this type of position where the volatility is going up on this time frame and it's about to turn back up on this time frame, we got to be a little bit more careful about our individual stock selection. We want to look for better opportunities, maybe even looking for oversold opportunities, so that we don't get caught on the wrong side of volatility. All right, let's go ahead and move into the individual time frames. So one of the things that bothered me when I was looking at this to prepare for this video is when I looked at the monthly. I mean, this is getting pretty stretched. I mean, this is so at this level, yeah, you're pretty far away. But when you stay away from it long enough, you got to have a little bit more concern. Now, there's nothing wrong with the momentum conditions at all. We've got confirmation. So I'm not looking for this to fall apart and break down, but we could go through some form of a consolidation, maybe come back and test the 500 mark again or something like that, which would be actually a big deal in the S&P if we came back down to 5,000. I don't know that that's going to play out that way. When I look at the weekly chart, I can see that we're stretched away on this time frame as well. We've got, I guess, a modest form of divergence where we haven't made a higher high with price. But I don't see the type of divergence that would have me, really concerned. As we've moved up, the green DI has been moving up as well. Red DI has been moving down. Now, if we get some form of contraction, then we could start to look for this to take a lot more time. And it's a possibility to play out that way. Or if we see this red line come back down through the signal line, the MACD, break its signal line at this level with divergence, then we got to start thinking that we've got something a lot more meaningful in store. So it wouldn't take a whole lot, but the market just doesn't seem to want to really go through any kind of a pullback. So I think we've got to sit back and watch and wait. Now, I do think there's an increasing likelihood that we're going to get a pullback. All right. And let me explain why. Let me go to the daily chart. So if we look at the daily, we've had 2 bad days. I already pointed that out. We're sitting on the 18-day, but we've already gotten the MACD to roll over here, break down through its signal line for a second time. Now, a lot of times you can get a break, and it takes the second one, and you could argue that based on the fact that this made a significant new high and this basically just made a double top, that's still divergence. All right, I would still refer to that as divergence. So we now have the crossover pattern with divergence, all right? But the other thing that I like to look for is when ADX is over 50 and then turns down. What does that turn down mean? It means that we're going into contraction, because you can see what happened. We were in an expansion phase with the DI lines going apart, and now look at what happened. Red has finally taken out, make it a higher high. This is making a lower low, and I would put this flatly in the contraction camp now. Now, there could be a lot of volatility. I'm not saying it's going to go straight down. We could see some movement here. It doesn't necessarily have to be a vertical move to the downside, but I think we're into this period where we're going to end up breaking the 18-day. That's my read on this right now, and that we could go through a little bit of a longer consolidation. Now, one of the things that I would tell you is that if you look at what's causing the market to go down, all right, it's the big names. I mentioned this, I think it was last week, how the top 10 stocks make up 37% of the market. Well, the RSL 1000 has actually had a great week, okay? But if the top 10 names are going to go down, the market's basically going to go down. They're having such a massive influence. Their weightings are just so big that it could be masking pretty good performance underneath. Now, it's gotten a little sloppy here, even for the stocks that have been moving up, just based on the market action. It makes sense. And the Russell did not have a good day yesterday. So, we got to be careful in here. As I said, when the volatility is going up, especially in both time frames, you got to be a little bit more concerned. Now, one of the things I do like to look for when we're in this position is we're stretched away on the weekly, stretched away on the monthly. We're starting to show signs that maybe there's some contraction, consolidation, correction taking place on the daily. Go and see if you get any confirmation on the hourly chart. So we've gotten the ADX to get going, but it's not anywhere near as strong as the last peak. But then we made a pullback and made a new high, and it dropped down off. And then we made a pullback and we made, a marginal new high, and we actually didn't get above. That happened kind of quickly. But the fact of the matter is, I think we're in a position where the sellers look like they want to take over for a little bit. Now, because of the way this is set up, and let me just make sure you can see it on all the time frames. If we get a little bit more follow through here, and then we get some kind of a retracement back up, and we could be looking for an RSI sell signal on the hourly to develop here over the course of the next few days, especially if this is kind of breaking, if it looks like the 18 is rolling over, then we could actually have a potential to hedge our long portfolios in stocks if we want to hold, right? You figure out how many of those stocks you really want to hold through a pullback, and you figure out how much to hedge, and then you can do that with the spiders. I usually use the SPXU, but what we'd be looking for as a signal is we don't want this to come back up with a vengeance, okay? We want it to come back up lightheartedly. And again, I think the RSI signal can be really helpful. Obviously, if you got like a modest little pinch to develop, that could be worthwhile as well. But I do want it to get a little bit closer to the 18 on the hourly while this 18 is rolling over. So I need a few things to take place here, but I'm just telling you, like I'm sort of looking at what's taking place on the monthly and seeing how stretched these are and saying, yeah, I think there's a pretty good chance that we could have the potential for a little bit more of a correction than we've seen for a while. So we want to take all of this into account as we're going through and making decisions. But the main decision I would say right now is I would be a lot more selective about new buying, both on a daily chart or on a weekly chart at this point. All right, have a good weekend, and we'll see you next time.